Welcome, traders. Another episode of our stock outlooks and alerts. Coming into the new year for 2019. I hope everyone had a good holiday season. We sure did, and we're excited to be back and ready to take advantage of 2019 in what we think may be a very stagnant or bearish year. We do not see the bull run continuing into 2019 and think there's some further downsides. So this will be an interesting year. We'll see a lot of these passive funds start losing a lot of money, which will be cool for us active managers out here. Anyway, let's dive right in. Looking at SPY, as we know, we had a slight pullback, bear rally, whatever you want to call it, last week. You can call it the Santa Claus rally. You can think of it just as the market was overextended and needed to come back up to its previous breakout level. That's kind of what we're viewing. We don't think this is bottom of the market by any means. Although the VIX did spike at about 36, which was pretty interesting, but which is about to close back in, what was it, February? Although it spiked up to 50, the wick just didn't close at that point. So it's on a downtrend back down now, but we still think that will be a factor going forward. All right, SPY. We're still waiting on SPY to take some more puts on this bad boy. We're waiting for this resistance level right here at that 258, 259 level. So I put an alert right there, and just to make sure that I'm actually really going to do about 2 videos because I want to be able to watch this. All right, QQQ probably our best setup for the week. We're looking, if we get a continuation early Monday at the opening, we will be taking naked puts. This is the level we have been watching for a while, and we took shorts coming down off of this level, and now we're right back up there. So if this can hold, and we'll see a continuation downward, this is a high probability play. I mean, you can get from what, 154, probably safely down to almost a $10 spread right there is what the trade you could take on this would be. We might take something a little bit less aggressive, but the options there. All right, Flicks. We don't really trade primarily, but the chart looks kind of attractive right now. It's hitting his long-term support right here. Nice little rally, staying below the moving averages as the downtrend goes. It breaks below this and closes, and now we're closed in the middle pretty much. This whole daily range, closed a little bit above, but now we've gotten this, almost a doji candle, and it could be a reversal going downwards if the market go down on Monday. So this is another nice trade, although the options usually are pretty expensive on Netflix, which we stay away from them, but just so you get out there. All right. We love shorting the bank stocks right now. JPM was a couple great trades on that last week, taking on from 100 to about 97, and then 98 down to I think it was like 90, 96 or so. So we captured a majority of that move. It was great. Fed raised hikes last Wednesday, fourth time for the year. A lot of people think that they weren't going to go through with it. The economy has been showing signs of slowing, cracking, and but the Fed stayed strong and pissed off the president a little bit, who's been recently asking if he should be replaced, even though he's the one to appoint him to the Fed chair in the first place. So we're going to be monitoring those headlines, but we think it was the right decision. Interest rates have been way too low for so long. That's why a lot of these equity valuations are so inflated, is because they've been able to loan at very low rates, able to grow their their more financially engineerable items on their balance sheet, and has been able to drive valuations up in the market for quite some time. So we think there's still a lot of downside here. We think that we need to tighten up this economy a little bit. It's going to be rough for a lot of people, but I think that's in the market cycle. that's kind of where we're at. We're nearing the top, and we're going to start a little bit of a retraction period going forward. So bank stocks, something we're watching heavily. All right, going down to Square. We like the stock long term. I think they're pretty innovative. They're trying to do some things with the blockchain technology, which we find pretty intriguing. But the chart just looks terrible right now. So we're going to be buying some puts just to protect our portfolio. We don't necessarily want to give a signal to short the stock because we don't know this level right here. We're taking it off the tops in March, and we did get a breach in that, back in November. But that breach closed below. I mean, look at this price action right here. You drop all the way down on the 16th. You open lower and you finish higher. So there's a lot of funky price action right there. So that might not be a double, like a second confirmation of that support resistance level. So this might get just blown past, and we might come all the way back up to its prior. So this wouldn't be necessarily a trade we would take, but we are protecting our portfolio, and it doesn't necessarily look good. So we wanted to bring it to your guys' attention. Utilities, one of the one sectors that's almost you can make a case for bullish, although we're not. You're still below both the averages. You're slightly you're in the midst of the battle of your long-term resistance right here. And the upside's only $3.5, $4. So if you want to make a bullish call in this market, by all means, this is probably one of the better plays to go for. But we don't recommend it. We're going to stay primarily bearish or in cash, and the cash has been better in the last 3 months than being in the market at all. So goes to show a little perspective. Microsoft. All right, this is weathered the storm pretty well. I'm sorry. It really hasn't broken over long-term support, especially in October and November. With the market finally coming down. So is this finally the turning over? It came back up to its prior resistance. Will it go down? That's what we're going to be guessing. The market starts to deteriorate on Monday morning. This is going to be a position that we take. They are one of the biggest companies, along with Apple, which we'll look at next, and they really dictate a lot of those percentage moves in the indexes that are trading, primarily QQQ. So Apple. So this is we're watching on Monday on Apple. Microsoft, if it starts to deteriorate, we're going down. We have to see a clean break, and we're gonna have to see probably an hourly close below this 150. It could probably do 150. 154, 150, 450. It's got to go down at least another $2 and hold that on hourly for us a short position, or naked puts. But this is another good case of if the markets do rally early in the week, it could be a good time to get in on the upside. Although we won't be partaking in that trade. Going to some semiconductors. Alright, put an alert here. One that ever breaches that level. AMD is a stock that we like long term. Semiconductors are a pretty cyclical market, but we think that the demand for them is only going to increase in the coming years. I think this whole run up was a large part due to the scaling up of these manufacturers having a whole another sector of crypto demand that they were underestimating in their press reports before, saying it was only affecting 10-20% of their business. But now that demand for crypto is actually waning, and the prices will break even point for most of these GPUs and mining rigs that are mining these bitcoins, we are seeing a big drawback in oversupply. The reason is there's oversupply of GPUs in the market, not enough people to buy them because there's not enough money to be made from them at the current state because they overproduced, and we're showing fantastic numbers through these quarters, and now we're seeing a little bit of that retraction. Long term, we love this stock. They are the second to NVIDIA in the GPU world, if you will, although they operate at a much lower price point and have some pretty cool innovations coming that they've just released this last year with their new GPUs, which are almost in line with NVIDIA's, as long as some server technology that NVIDIA hasn't captured as far as market share yet. So there's some interesting things coming forward. We think that anything under 20 is a pretty good buy for AMD long term. If you have any outlook over 2 years, 2 years. At this level, you see this nice double bottom, and you see this nice, coming resistance coming into this bull market. So this is a pretty good level to watch, a pretty good cost basis if you want to get in, or take a position if you think that markets are going to rally. It's a good, time to go long on AMD. We don't. We will be buying maybe some protective puts if we breach this level. Is why I put this alert here. So that's kind of our thought process. MU, that's a semiconductor that we would short. We're going to try to make it come back up to this level. We want to see 33.50. And then we'll look to enter that. Let's move on. Hold on real quick. Jump to the JPM. I want to know if it breaches 100 again. And I want to know if you break your 100 point again. Let me open. All right. Twitter. This is a bullish technology play. Unless we see some aggressive action on Monday morning, we won't be. We wanted to present it just because there are some opportunities in the market right now. If you do want to be on the long side, it's just not within our risk parameters. So we're going to our high probability setups. But nonetheless, this is the case that we're making for it. We have long-term resistance. It's bounced off 3 clear times right now. We have a little bit of that rally, the Santa Claus rally, if you will. Bring it back up, and you can take about $3, $4 spread back up to those moving averages if you wanted to. You get a little dicey right here in the 30 areas, but if the market goes up, I think you're pretty safe on this one. All we absolutely love is this Caterpillar call. So home builders have been slowing. Their numbers have been waning. It's been a precursor to many recessions and contraction of available capital in the market, right? So when huge companies aren't able to borrow a bunch of money at a really low rate, are they going to be able to build the type of buildings and infrastructure that they've been planning to? No, that is quite simply the answer. Is there's too much risk on the table. If you don't know if the country is going to be in a bull market or a bear market for the next decade, if you think that the bull market's slowing, you may want to put your investments elsewhere. And so U.S. home builders are getting wrecked right now, and contracts aren't getting renewed. A lot of concerns about the economy. Are companies going to be able to spend this capital expenditure budget on what they want to, or should they hoard it for survival? Because they're going to have to lean up. They're going to have to be more efficient to survive a recession. It's a lot harder for a company to stay cash flow positive in a recession than it is a bull market, which is basic economics. So this is a play that we really like. We're looking for it to come right back up. 130 would be a great level for it to hit for us to take something down. Above. It's a pretty big mover too. You got 5 on ATR, so you take a $5 spread on this for the weeklies. If you're going longer than that, you can even go $10 if you're patient enough and want to see the lows. All right, that does it. What we're watching this week. We'll keep you updated if anything comes across the news from the administration that's going to put things out of whack. But other than that, let's start off the new year right. Cautious and take positions to the downside when the probabilities are in your favor. You can wait for these pullbacks to get a good entry, and we're kind of glad that we were in the market this week. It would have been bloody for us. We're still short the market, but it was overextended as we mentioned last week, and it's relieving to see a little bit of a pullback so we can have a little bit more confidence in the downside and going forward with this. All right, well, that's all from our side. You guys know how to contact us, our website, our Discord, our email, all open. Any questions you guys have, love to answer them. We will see you on Friday for the close. All right, stay safe, everyone.